Are you a high value individual struggling with the complexities of mortgages in the US? Whether you are navigating the mortgage landscape as a non green card holder, a green card holder, or even a naturalized US citizen, today's episode is packed with crucial insight just for you. Join us as we sit down with Rich Kimball, a seasoned mortgage officer and a real estate investor, to uncover the truth behind the biggest challenges, the hidden costs, and strategic opportunities in real estate investment. Get ready to unlock the secrets to achieving financial independence and building a lasting legacy through smart mortgage strategies. Don't miss out. Your path to real estate success starts here. Thank you for showing up to my channel today, Rich. It's been a pleasure working with you and your team, and I'm glad we get to sit down to answer some of the few questions that I've been getting from my clients, and getting answers from a lender, I think, will give them a better perspective of what to do or what to expect when they want to purchase, either for their primary residence or even for investment. So, quickly, I know we are short on time. One key question that I guess it keeps coming up when we start working with a client, the first thing most agents ask for is a pre-approval. Have they been a pre-approval? Can you touch on one, the importance of pre-approval and how your team usually, approve any applicant when they want to buy a home, either for a primary residence or for investment?
Thanks. Thank you, Patrick, for having me. I really appreciate the opportunity, and our team appreciates working with you. You do a great job. So, to talk about the pre-approval, we're going to go back and really talk about three different things. We're going to talk about a pre-qualification, a pre-approval, and of course, a fully underwritten approval. Now,
Okay.
fortunately for you and your listeners, I've been doing this for close to 40 years. So I can tell you the whole history of the pre-approval and how we got to where we're at today. So let's start with the distinction between pre-qualification, pre-approval, and fully underwritten.
Okay.
So pre-qualification, and if you ever have a lender that issues you a letter where it says pre-qualification, that's a sign that you're not really working with a true professional lender. And I'll tell you why. A pre-qualification is Patrick calls me and he says, "Hey, Rich, I want to buy a $300,000 house. I'm making about $100,000 a year. I've got no debt and a 780 credit score. Do I qualify?" Sure. You told me you're making a lot of money.
Yeah.
You've got 20% down. We add that part, but you've got money down. You got great credit. Yeah, absolutely. You qualify. Unfortunately, there's not really anything that backs that up. So that's just you telling me a couple of things, but I haven't verified any of it. So a
Right.
pre-qualification letter, real estate agents know that if they're looking at a letter where it literally says pre-qualification on there, they don't even consider it, because their understanding, as should now you and your client's understanding be, it doesn't mean anything. It's
Right.
just us having a conversation. Nothing's verified.
Mhm.
So now let's talk about the pre-approval letter. Now, the traditional pre-approval letter has been around for decades. Back in the 90s, Fannie Mae and Freddie Mac came out and they started automated underwriting. So they started electronically providing a response to the mortgage company based on the information that we put in. So now Patrick comes to me. He gives me a full application. I know what he does for a living. I know how that income comes to him. Is it salary? Is it commission? Is he self employed? I know where his money's at. and they know what other debts that he has because we go and we review the credit and we add it to the application. At that point, those things are sent electronically to Fannie Mae, Freddie Mac, FHA, and they give us a pre-approval or an underwriting approval. It's electronic in nature, but it's pretty comprehensive. Now that letter, as I presented to Patrick and or Patrick's clients,
Mhm.
that's the letter that's been the gold standard for, like I said, since the 90s. However, there's a better way. And about 6 years ago, the company that I work for, Cross Country, we came out and said, hey, we can do something better than this. We can actually fully underwrite these pre approval letters. So, what does that mean? When you apply for a mortgage and you get a property under contract, you are essentially then providing tax returns, paycheck stubs,
Mhm.
W 2s, bank statements. You provide all that information. Well, our processor gets it. They put it together in a file. They review everything. They verify employment. They verify deposit. They send that on to an underwriter, a human being, who looks at all of that stuff and clears the conditions. Now, that would normally take you being under contract to buy a property. We said we're going to do it first. We're going to actually do the full underwriting first. And now we come back to Patrick and we say, look, this approval letter you're looking at today is subject to title and appraisal, and we can close in 10 days or less. So that's a very, very strong approval and really what you're looking for. So as the viewers of this podcast look at things and they say, how would I measure my lender to make sure that they're being thorough? One of the things that you'd want to know is, did the lender pull a credit report? Did the lender run the loan through automated underwriting? Has the lender seen my paycheck stubs, my W 2s, my tax returns, and my bank statements? If your lender hasn't done those things, it's not really a thorough approval. I know that's a long winded answer, Patrick, but it's very thorough. And it's really what your clients need to know as they step into the home buying process.
Rich, that's more than I even asked because as an agent, there is a lot of misconception out there when it comes to pre-approval, you know, and as you stated, instead of asking a pre-qualification question, I did ask a pre-approval because working with someone with pre-qualification, as you also stated earlier, it doesn't help because it could happen that we might find a house, make an offer, get the offer accepted, but when it's time for the loan to even be for them to even qualify for the loan, they may not qualify. So not only are they wasting the seller's time, they are wasting your time, they are wasting my time, and they are also wasting the how do we call it, their time. So thank you so much, and I love the answer that you gave. Now
Thank you.
I want us to drill down a little bit. So as you are aware, I have a diverse clientele, right? Some of them are US citizens, some of them are foreign nationals. And as you may know, even with foreign nationals, there are three levels, right? Naturalized citizens, uh, US persons, all US persons fall into two groups: green card holders or naturalized citizens, and non US individuals, those who don't have green card. Now, working with them, there is a lot of misconceptions about mortgages, whether they can, even get a mortgage here in the US.
Hmm.
Now that I have you on this call, I would love for you to, you know, l- take us through the process. We will split it into two: US persons and non US persons. You know, what are some of the myths that you yourself you've heard, and what are some of the programs, and even if it's possible for them to even get a mortgage here in the United States, as long as they get pre-approved?
Sure.
You
Yeah.
know,
Right. They got to get pre-approved. That's the important part.
Right.
So, as we talk about this, there's really a couple things. So let's talk about people that are here in the United States without a green card. They're going to fall in, even that group is going to fall into a couple categories. So
Okay.
again, people here with no green card, no permanent resident alien card, also known as, there, some people are here on a work permit. So
True.
if you are here on a legitimate, valid work permit, that's a workable situation for us. And Fannie Mae actually will lend to people that are here on a valid work permit.
I
So that's
see.
an important distinction. Now, the next group of folks that wouldn't necessarily have a permanent resident alien card or a green card as it's known would be folks that have an ITIN number, which is
Oh,
a as I wrote, I actually don't know why I'm blanking on that. Oh, individual taxpayer identification number. So also known as an ITIN. So individual taxpayer identification number. Now, people that are here without a green card could go to the IRS. Let's say
okay.
they want to work, they can go to the IRS and apply for an ITIN number. And they'll get that ITIN number. And there are loan programs that are available for folks that have that ITIN number.
Okay.
Those programs, though, are a little limited. We could talk about that. And there's some challenges there to lending in ITIN. But ITIN lending is available here in the United States.
Okay.
And it does require a handful of things, which I guess I can get into. You okay with that?
Yeah, that's fine. Go ahead.
Perfect. So with the ITIN, with people that are here, again, no green card, but they have their ITIN number, the biggest challenges that they're going to face is the establishment of credit. So they do need to have some sort of credit established. It is possible to go out and have credit established, even though you're not a citizen. If you have an ITIN number, many people can get credit cards, car loans. Typically, what you'll find is the smaller community banks will
Okay.
make those types of things available. On
Okay.
a credit card basis, Patrick, some banks will say, "Hey, we'll give us $300. We'll give you a credit card with a $300 limit. That's called a
Right.
secured credit card." It's
Correct.
fine.
Okay.
It still builds credit for you,
Yeah.
which is perfect. The other big challenge that we see with folks who want to get money for a house is savings. So they do need to have a savings account somewhere. Cash in the mortgage lending business is a dirty word. They just don't like cash. So if you have the ability to establish a checking account, a savings account,
Yeah.
really, really important if your long-term goal is to go buy a house. So the
Okay.
things we see hold people back, they don't work on getting credit because they don't think they can get credit. And keep in mind, some of these small community banks will actually make a car loan to you. It's relatively easy to get some sort of car
I see.
loan, even with an ITIN number. So secured credit cards, credit card numbers. We don't necessarily like recommending some of the big banks, but I think Bank of America even does provide
Okay.
credit cards for folks with
Okay.
ITIN numbers.
I see. Okay. I didn't know that. Okay.
Yeah, so those are really going to be the challenges, and then of course, we could talk about who's lending to those folks. There is, as far as challenges are concerned, there's definitely a higher requirement for down payment. So
Okay.
there's definitely a higher requirement for down payment. With our company, we're looking for about 10% down. So
Okay.
that's definitely higher than your traditional programs
Right.
available through Fannie Mae or Freddie Mac.
Okay.
There are some community banks that will offer a little bit less down. The challenge that some of those banks have is because of the need, they're kind of overwhelmed. And so the customer service level, I'm not taking anything away from any of those banks that offer those programs. I think they're great. But at the same time, there's such a high need for that. The feedback we get from clients is that just the customer service level is not where it should be.
Okay. That makes sense. So let's stay on the challenges for a second.
Mhm.
So from what I'm hearing, right, we are talking about being able to acquire a mortgage, right?
Mhm.
Um, Now, let's say, for instance, a non-U.S. Citizen, a foreign national, was able to get the ITIN number.
Mhm.
They've been visiting the country, for some time, so they've been able to establish some credit. Going through one of the banks to get a
Sure.
savings or a checking account. They've probably purchased, like you said, a vehicle, established their credit. Now they want to buy a home. Does their status affect the interest rate they will get compared
Sure.
to, let's say, a U.S. citizen or a naturalized citizen like me?
Yeah, it's definitely going to have an impact
Okay.
on the interest rate. The loans that somebody with a green card, permanent resident alien card, or naturalized citizen can get,
Mhm.
they can go to get a conventional loan or an FHA loans. All the money for those loans comes out of Wall Street, and they're how do I say this? The easy way to explain it, the money's cheaper because we can go get it in bulk from Wall Street. When a bank or a lending institution creates a program that can't be sold to Fannie Mae or Freddie Mac or endorsed with FHA, when we create a product for that, the loan itself can't easily be sold. So if I'm ABC Bank on the corner and I say, hey, I want to create a product for folks that have an ITIN number, we're going to ask for 10% down. Once I make that loan's a little harder to sell on the market. So
Okay.
as a bank, I have to be committed in a long-term
Yeah.
position to keep that loan. So because of that, I have to ask for a higher rate of interest. There's risk involved with this loan. I can't move it as much as I'd like to.
Yeah.
So the short answer, that's very technical and I apologize. The short answer is yes, the rates are higher for these loans, primarily because the loans are what they call portfolio loans.
Okay.
So they're loans that are basically just going to be put on the lender's shelf and they're just going to hang on to them.
Okay. So with that said, right, as you know, I'm also an investor. So buying an investment property compared to buying your primary residence, usually the interest rates do differ, right?
Yeah,
Because for investment property, on average, you are adding on maybe one or between 1 to 2%, right?
sure.
Now, does the same apply to the foreign nationals?
Yeah, so we got, and I want to make a clear distinction too, because you mentioned foreign nationals a couple times. Um, there is some lending out there
Okay.
specific to foreign nationals.
Okay.
In our world, a foreign national is somebody who is a citizen of another country. They work in that other country, but they visit here frequently. Maybe they've got family here. Maybe their job that they have in Europe or Saudi Arabia
Hmm.
or whatever brings them here to the United States, and they want to invest in a piece of property. Maybe it's a second home because they're sick of being in a hotel when they're
Right.
visiting their parents or whatever, their siblings. Um, they can get some lending as a foreign national.
Okay.
That's a little bit different type of lending. Now, folks that are here on an ITIN, as an example, they can invest in real estate. We do provide a cash flow only program for people with an ITIN number. So, what is that?
Okay.
That means I will help somebody who is not a citizen, not a permanent resident alien, but here with an ITIN number. If they want to take some of the money they're making and invest in real estate, we'll actually qualify that loan based on the rental income coming in on the
Okay.
property. We don't
Okay.
look at their paycheck stubs, we don't look at their tax
Okay.
returns. So that loan, yes, you made a great point, Patrick. If you're if you're a US citizen and you're buying your own home,
Hmm.
today you're going to do that, today, and we'll make this distinction. It's September 5th, but today you're going to do that in the sixes. If you're
Yeah.
buying investment property today, you're going to do that in the sevens.
Right.
Now, if you're an ITIN borrower, you're probably going to buy your own home somewhere in the sevens. And if you're
Okay.
looking for investment property, you could be in the eights.
Okay.
So it's about
Okay.
so figure another percentage above.
Okay. So it's interesting you explain it the way you did, right? And I think this also helps me in clarifying, much more, because I also do have clients who are foreign nationals
Mhm.
who live outside the states but visit frequently. So I have one particular client in mind. He's always in Chicago almost every other month, right? And he usually stays in hotels. He's
Right?
planning on purchasing a home, right? I also have another client who visits the states at least every 3 or 6 months, right? He is trying to, and he's also an investor in other countries, including his current home, right? He wants to start investing here in the United States. So, to your point initially, can we touch on those type of clients also to see, okay, what programs are available to them? What challenges come with those programs? What are some of the requirements? Because these are some of the questions they've been asking me. So I'm hoping you'll be able to help me answer some of the questions for them.
Yeah, so this answer then specifically is for foreign nationals, which we've established are folks that actually permanently reside outside of the United
Correct.
States.
Yes.
So we do have programs for them to buy second homes and investment properties here in
Okay.
the United States. The one thing interesting about a foreign national is that the down payment requirement for these are actually a lot higher than an ITIN. Typically a lender wants they could want as much as 30 or 35% down.
Yeah.
So it's definitely a lot more expensive from a down payment standpoint.
Okay.
But the programs are there, they're available. It's just because the client lives in another country, and if there's a default in any way, it's probably more difficult to chase them down in another country. So having a better equity position as a lender is really key in those clients. Now, the products that are available, actually, I've got some relatively aggressive products that are available, 7-year arms and things of that
Okay.
nature. That maybe even an interest only option on a 7-year arm or a
Nice.
5-year arm for the foreign nationals.
Okay. So you did mention right. Can you explain to those folks that don't know what is?
Oh yeah, no, that's great. Okay, so there's with mortgages, you're either going to have a 30-year fixed or a 15-year fixed traditionally,
Mhm.
and that means the rate's just fixed through the entire term. An ARM stands for an adjustable rate mortgage, which means that if somebody says to you as a consumer, "Hey, I have a great 5-year ARM rate," what they're saying is that initial interest rate is going to be fixed for the first 5 years
Yeah.
or fixed for the first 7 years. So you should get a little bit lower interest rate if you're talking about an ARM or an adjustable rate mortgage.
Okay.
You should be able to do that. We've been in an interesting time where we've been in what they call an inverted yield curve. And all that means is that the short term rates actually have a higher return than the long term rates. So it's ARMs haven't been as attractive as we move into a recessionary cycle where the Federal Reserve is lowering interest rates. ARMs will become more attractive again.
Okay. Okay. Now, thinking about all this, right? And I want us to go back a little bit. So, for those foreign nationals, I want to stay on them for a second. For the foreign nationals, let's talk about the interest rates.
Mhm.
How, even though their down payment is going to be slightly higher
Sure.
than um, an individual who lives here in the states, whether they are U.S. persons or not. You did explain that non-U.S. persons that live here, their rates are going to be higher than U.S. persons.
Mhm.
How about the foreign nationals?
Yeah, the foreign nationals, even though they have that significant down payment, are probably going to be in the higher side for the interest rates.
Okay.
Second home, I would speculate right now, second home is probably pricing, so even on a 5 or 7 year arm, probably
Okay.
pricing somewhere in the high sevens. If you get
Okay.
investment property, it's going to be probably 8% for those foreign nationals.
Okay. 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 That makes sense. Now, I know you've slightly hinted on risk, right? Especially on the lender side. Some of the questions that I've also received from the foreign nationals, especially, okay, I'm a foreign national, compared to other countries, right? Buying real estate, usually it's on a lease term, right? So
Oh,
maybe
yeah.
you are supposed to own it for about 99 years or 100 years or 50 years.
Yeah,
You know, can you touch on that for me? Because I keep telling them that in the States, if you buy a home, you own it regardless,
sure.
of what is probably going on, and how you plan your estate, you know, you and and the next generations are going to own it. So I would like you to talk a little bit more about such concerns.
Sure. Sure. We actually have a little bit of that here in the United States. I'm not sure if you knew, but like in the state of Hawaii, Hawaii
Okay.
owns quite a bit of the land there.
Oh, I didn't
And
know that.
yeah, most of the property there is on some sort of land lease,
Okay.
similar to what these other countries are. So what it basically means is that look, the state of Hawaii has said the house, let's say you bought a house in Hawaii and that house is actually the ground underneath is owned by the state of Hawaii. However,
Mhm.
they have a 99-year lease to the owner of the property. And at the end of the 99 years, sure, they could revoke the lease, but there's no reason for them to do that. They will probably extend it for another 99 years.
Okay.
And most countries would do the same type of thing, assumedly, again, I can't speak for regime changes and specific politics, but land use in general, the 99-year is they're just going to extend it and you still have ownership rights to that property. You can do things to the property within whatever the village zoning is and the municipality
Okay.
zoning. You want to put an addition on there, you can do that. You technically don't own the land, but you pretty much own the use of the land.
Okay. And this is in Hawaii, right?
Yeah, Hawaii, they've got a lot of land leases
Okay.
in there, a lot of land leases in the state of Hawaii.
So compared to the other, 49 states,
Mhm.
you know, what's the difference?
Yeah, in the other 49 states, that dirt is yours. So
Okay.
that dirt, everything in that lot is 100% yours. There's no lease to worry about. Yeah, it's 100% yours. Now, there is something called eminent domain, which a village, a city, a state can come by. Let's say your house was on a busy road and they decided that they just wanted to add two more lanes. They can issue something called eminent domain, take the front half of your yard, put those two lanes in the road right across it. They have to pay you for it. But
Yep.
that's about the only circumstance that you're going to see a government come in and say, hey, we're taking your property. Other than that, here in the United States, you own it. You do what you want with it. You mentioned generational wealth. You can leave it to your kids and that type of thing.
All right. Okay. Great. I keep getting more questions. I keep remembering more questions. So let's stay online for a second. I
Sure.
know since we've been working, I haven't brought any client who wants to purchase a land to your team. Does
Okay.
your team work with clients who are interested in purchasing land? And what zoning? You did mention the zoning types. I know some lands are zoned for farming, some for residential. The reason why I'm asking is I currently have a client who is interested in new development, right?
Okay.
So with situations like this, I want us to touch on foreign nationals again and individuals that are actually living here in the States.
So, land lending, and when we talk about land, we're talking about a piece of dirt that has no building, no structure on it.
Right.
The land. Now, it could be an individual lot in the city where you can just build a house, or you're talking about a developer. So you're talking about somebody who maybe wants to buy a big piece of land and put a bunch of housing on it, or
Right.
put some
Hmm.
industrial on it, or whatever.
Right.
Um, that's all very unique lending space.
Okay.
We do get involved in some residential land, commercial land, typically not.
Okay.
You're going to probably talk to a commercial bank about commercial
Okay.
lots. The one big thing about land is that most banks or most lenders want to know what the intent is when you
Okay.
buy the land. So they're not really excited about being a lender on a piece of grass. They're
Right.
more excited about being the lender on a piece of property that's going to be developed into something,
Okay.
whether it be a single family house, a row of townhouses, a subdivision, industrial, something along those lines. You'll get a lot more people interested in that. Now, to go to your second part of your question about foreign nationals buying land, I think that's really tough. Uh, Foreign national lending is already kind of a very, very specific lane that there's
Okay.
only a handful of people that do that anyway. And now you add another component. Hey, we only have a handful of people, and then there's only a handful of people that do true
Right.
land loans. I think that's very tough lending to
Okay.
acquire for a foreign national.
Okay. That makes sense. So I would like to switch gears. We did have a conversation recently, and the information you gave me, I think, is key, is very important to share with my viewers, and that is appraisal, right? So as a real estate agent, when I'm helping my clients buy, I want us to buy. I will advise my client to pay for the appraised value or to pay less than the appraised value.
Oh, yeah.
Now, recently, actually, it was last week that I just closed on a house with one of my clients. The appraised value came out to be less than what we offered.
Yeah.
We negotiated, but they didn't want to go to the appraised value. They wanted to stick with their listed price. By the way, we offered more than the listed price.
Okay.
My client needed one needed to buy a house as soon as possible, and that was the only house that she liked after looking at multiple homes. So we decided to offer more than what they were asking for. So can you repeat what you told me on the call, when we had that conversation?
So, and because I think we talked about a few things around that. So, are
Mhm.
we referring to? I guess there's two things because I think we had a longer conversation about this. Are we referring to the fact that it's okay to pay more than list, or
Yes.
okay, that's
It's okay to pay more than the appraised value.
fair enough. Oh yeah. Oh, perfect. Okay, yeah. So when we counsel somebody, we do things a little bit differently as a lender. We have a session, which we call a strategy session with all of our buyers, because we want them better prepared to go out into the marketplace. And one of the things that we cover almost immediately when we talk about the marketplace is we find the community that they're looking at. We look up the stats with the realtor board and we determine, okay, you're looking in I think I just pulled this up, Glendale Heights. So if you were to pull Glendale Heights, Illinois, for the closings that happened in July of 2024, super recent, 74% of the homes closed over list price. And there was, I want to say, 30 or 39 homes. We looked at a couple communities that day. Either way, I'm sorry, three-quarters of those homes sold over list. Now, that begs the question, if the realtor and the seller picked a number, whatever that is, and a bunch of people decided that they really wanted these houses because they were competing with other buyers and they paid over list. Well, what does that really mean? The first thing that we'll talk about is it okay to pay over list? My answer is yes. And
Okay.
the reason I say that is because value is in what somebody's willing to pay for it. You, as a buyer, got to the point where you're paying more than the list on this property because somebody else was also willing to pay more than list.
Right.
And you had to outbid them to
Mm-hmm.
win that offer. So if the house was listed at 250 and somebody was willing to go to 260 and you said, I'll go to 261, well, that is the value of that house because somebody was willing to pay 261
Yeah.
and somebody was standing right behind you willing to pay 260. Now, the
Yeah.
challenge the appraiser has is let's say they go in and they pull that area for very similar homes and
Mm-hmm.
they see that the highest sale was about 250. Uh-oh.
Yeah.
So the highest sale is 250, but you as a buyer paid 261. Now they are allowed to take in consideration the fact that it's a high demand market, and they're also allowed to use a little appreciation. So what do I mean by that?
Yeah.
Let's say the average appreciation in Glendale Heights was 5% over the last year. Let's say that sale had happened 6 months ago. Well, that sale of 250, I can actually add 2.5% to it.
I see.
So because the market is 5% a year, sale happened, and they'll do that on a monthly basis.
Okay.
So,
Okay.
they'll do it on a monthly basis. For round numbers, let's say Glendale Heights is appreciating at 6%, and that sale happened 3 months ago. Well, they're able to actually go half a half a half and add 1.5% to the value because that's the appreciation rate. So
Yeah.
that's helpful. But now let's say the appraisal came in at 260. You paid 261. And the fact of the matter is you're willing to pay that. Yes, it's 1,000 over what the property appraised for,
Mm-hmm.
but when your sale closes, guess what the new comparable is? It's your sale. So
Yeah.
now
Okay.
261 is the price for that type of property in that subdivision in that community.
Okay.
That's the new price.
Okay.
And think about it this way. This is a really important distinction. If people weren't willing or able to pay more than the last sale, then we would have no appreciation. The market would be flat. We would
Yeah.
have no appreciation. Oh, Patrick, I'm sorry. You paid 261, but only appraised for 250. You got to go down to 250. No, that's not the way a free market works. It's going to be worth 261 because a couple of people were willing to pay for it, and that's the new price for homes in that subdivision
Okay.
that look like that and are finished like that and all that stuff.
Yeah. Thank you so much, Rich. I really appreciate your time. Now, to wrap up, how can my viewers, contact you if they have questions or they want to do business with you? And if you can tell us a little bit about the programs that you guys have for all my viewers, that would be great.
Thanks. I appreciate that. So I personally have been in the business for over 30 years. Our company that we're with has been around for over 20 years. Cross Country Mortgage is now the largest retail mortgage lender in the United States. Last month, we closed about 3.9 billion in
Right.
mortgages. And we have a lot of product from a lending standpoint.
Mhm.
Certainly, we've talked about ITIN and foreign national. We have
Yes.
construction
Yes.
loan products. Anything you can think of that has to do with a residential mortgage, we have, whether it's rehab loan, new construction loans, FHA, VA, reverse mortgages, any need you would have, we have covered. Now,
Okay.
I have a team. So as I'm on this podcast with you today, Patrick, if somebody were to call into our office, my team is actually going to help answer that so they don't have to wait 35, 40 minutes for us to get done with the podcast. They'll take great care of them. My team can be reached at 847 603 2300. That rings the entire phone network of my team, and somebody will take care of it. We're on call on the weekend from 9 a.m. to 9 p.m. at that same number. Why? Because real estate doesn't sleep.
Yes.
Patrick's out showing a house Sunday at 5 o'clock. and
Which I
highest and
do.
best, highest and best offers due at midnight.
Yep.
He's calling me, making sure we got an updated pre-approval letter, and then I'm calling the listing agent. And this is an important distinction. My team will call the listing agent. Hear this, please. I talked to an agent earlier this week. We won the bid. We were competing against other offers. I asked her what was one of the reasons she took our offer. She said, because you guys picked up the phone and called me. I said, well, that to me sounds like it should be an everyday event. She said, literally 1 out of 20 lenders call.
I
That's,
see.
you want a lender that supports you and makes sure that the house you fall in love with, that you're willing to spend more money than you've ever spent in your life, your lender's behind you, that you need to call us, because we're going to make sure that that's the house that you get. You can also find us, aside from the 847-603-2300. We're also at richkimballteam.com, richkimballteam.com. You can start your inquiry there. And Patrick, I really appreciate that opportunity to let people know where we're at.
Thank you so much, Rich. And as you know, we've been working together for a while, and I plan on continuing with you guys. Thank you so much.
Well, Patrick, you're great to do business with, truly. I mean, you really care about your clients, which it's a big deal to show the love and compassion that you have for your clients. And you are always looking for ways to help them out. So honestly, I couldn't endorse you more either. Really, if you're looking for somebody to do business with that's going to hold your hand through this complicated process, make it easy. Make sure you come out the other end happy with everything that happened. You want to do business with Patrick for sure.
Thank you so much. And I'll talk to you soon.
Okay. Thank you, Patrick.